Welcome to the channel, guys. My name is Jess. So Bitcoin has recently seen another rejection from 63k resistance, resulting in yet another daily candle close below the 200-day moving average. Will Bitcoin finally recover to see a move above this critical level of resistance, or are we due for yet another range low retest back down at 55,000? Let's dive into the charts today to go over all of that and more, including the recent weekly candle close and diving into the short time frame charts to discover both the bullish and bearish case scenarios. Before we get into all that though, make sure you guys smash that like button and subscribe to the channel for regular Bitcoin analysis every Monday, Wednesday, and Saturday. If you're after even more content, be sure to check out my free Telegram for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trades with exact entry points, targets, and stop losses. Alrighty guys, so diving right into the hourly chart here, let's go ahead and talk about what on earth has happened in the last couple of days. So moving into the weekend period, Bitcoin was traveling in a pretty strong uptrend over here. We had 2 points of confluence here as well as validation on the RSI as well. But as we were approaching this level of resistance up here at $63,000, we started to see a really big slowdown. So of course we were entering the weekend, so generally we do see a big drop in momentum and volume. You can see that it pretty much just dropped sideways for the entire 2-day period. But after essentially 2 rejections from that level of resistance over here, we finally saw a breakdown of our short time frame uptrend, as well as a breakdown of our current level of support, which had been $60,000, right? It ranged from 60.5 to 59.5k. So after falling below that lower sell side liquidity level over here at 59.5, you can see that green line. We had a bearish continuation to fill what had been a volume gap over here, which took us right above our next level of support here at 57.9 thousand, so $58,000 to $57,000. Over here, we can see that on the daily chart, this next rejection has led to another daily candle close below that 200-day moving average, right? So we almost retested it just there on that wick, but unfortunately, we've just had that close below. So I think after that recent rejection, a lot of people were caught quite blindsided by the move. We saw a massive increase in liquidations, up by 331%, 24-hour liquidations, most of which are long liquidations, and 24-hour volume has increased by 67%. So the market is really starting to move now. It is crunch time, so we've got to figure out whether or not this move is going to result in a reversal and a potentially break above that 63k resistance, which we'll go over the significance in a moment, or a breakdown. So let's start off with our analysis by talking about the recent weekly candle close. Before we dive into any more analysis, let's hear a quick word from our sponsor Bitunix, where you can get 15% off all of your trading fees and up to $5,500 in sign-up rewards.
Bitunix is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account.
So if you guys have been in the market at all in the last couple of weeks, you would know that it has been an absolutely insane period for Bitcoin. But this last week in particular has been one of the most crazy weeks that I've seen for the market in some time. So we started off the week with a massive liquidation event, right? You guys can see that wick that took us all the way down to 48,900. And then we saw a really, really rapid recovery. If we take a look at the daily chart, we saw a 12 to 13% move upwards in that single day period on Thursday, shooting us right up to nearly 63,000. Okay, so that was this wick up here, just to then rapidly liquidate the longs, just as we saw, over on the liquidations map, right back down to close only very slightly above where we started the week in the first place. So what we have here is a spinning top. It's not perfect because the top wick it's smaller than the lower one, but for the purposes of defining and understanding what this candlestick pattern means, it is a spinning top, right? It represents a lot of indecision in the market. We saw 2 massive liquidation events from the top and the bottom, and both of which show us that neither the bears or the bulls were able to take control of the price action and the market in those periods, or they weren't able to sustain their control of the market. So we've had rapid rejections or bounces upwards on both ends of the scale. So spinning tops aren't necessarily bullish or bearish. They are actually relatively neutral candlestick patterns because they represent indecisiveness. But when we take that candlestick pattern in the context of all of the recent price action in the macro scale, what this spinning top could potentially turn into is a reversal signal. So a spinning top alone will not tell us that. We need two candles after. So we need this next candle and the spinning top itself. So if we see a bullish candle for the upcoming week, that confirms to us that this spinning top should represent bullish reversal. And it should signify that at some point we should go on to retrace that prior crash that we saw just before the spinning top pattern formed. So this massive wick downwards, this massive weekly move downwards that we saw over here from that range high retest of $72,000, right? So this is actually overall not a bad sign, guys. The weekly candle close, while it was an absolutely insane week, I think everyone can agree on that, the close itself wasn't so bad. The only thing that would make me concerned with the spinning top is if we don't get that confirmation. So if this next coming week is not bullish and we do end up continuing on in our rejection, then what the spinning top will represent is not reversal, but indecision that's led to a bearish continuation, right? Because as the bulls were not able to take control of the price action within that weekly period and within that recovery, we're going to get to see another rejection back down to that range low. So essentially, while it is this week that was the crazy one, it is the next upcoming weekly candle close that has the most significance and the most weight when it comes to determining and predicting the next segment of macro price action that we see within this range here. So when I say a bullish candle, obviously I mean a green candle, but what would be the most ideal weekly candle close coming up would be a close that moves us above our current key level of resistance on these higher time frame charts. So going over into a daily chart and pulling up our 200-day and 50-day moving average, we can see that the key level of resistance that we're trying to clear right now is this next one over here. So $63,000. We can see it on the short time frame charts. That's this little level over here. It's more specifically to 62.4 to 63.4. But the reason why it is so important is not only is it in itself a macro bullish trigger, right? Generally breaking above, we see these range high retests, and below we see large corrections downwards to the range low. But also it is the level of resistance that sits just above our 200-day moving average, which represents a macro uptrend, right? Generally when we're above the 200-day moving average, we can expect a range high retest and a break outwards. And also our 50-day moving average, which historically has been a level of resistance which has led to a range high retest, a breakdown of which has led to a range low retest. So again, another critical level for us to break above. So in that next weekly candle close, in that green candle, if we're able to establish a move and a close above this level over here and these two indicators, we would then be extremely confident that on those higher time frame charts, we should be able to expect a complete bullish reversal from this, candle close over here and a move to our range high resistance, which means seeing again $69,000 to $72,000, which would be exceptionally bullish for Bitcoin. So how are we going to break down the next week of price action? Obviously that's going to be on these shorter time frame charts. Let's move over onto our small time frames and dive into our analysis over there. Moving into the 1 hour time frame, guys, we can see that on the smaller time frames we do have a couple more key levels of significance, but as I said in the start of the video, we are currently hovering just above our key level of support right now from $57.2 to $57.9 thousand. Now obviously above support is support until it's not. So while we're above this level, we should be expecting a bounce here. We can see that below we do have a lot of volume right at this level, so we should be expecting a bounce. What we might see is just another small move downwards to fill the rest of that gap there that ends at around 57.5 thousand. So a move to 57.5 around the middle of this level of support here, potentially a slight flash lower, but as long as we bounce from this level, we are at a pretty high likelihood of seeing a reversal here and that bullish weekly candle close. So in the reversal, the first thing we look for is a move above our current bullish trigger here at 61,855, and then a further continuation once we close above that bullish trigger to test this level of resistance at 63.4 thousand. So upon that test of resistance, what we're looking for is a successful support to resistance or resistance to support flip, which means a daily candle close above this level as well as a bounce on retest, right? So that tells us that we have successfully claimed that level as a base of support. And, after we do that, we've essentially reclaimed these two key levels over here, which I wouldn't say guarantees because nothing's guaranteed in the market, but it gives us a very high confidence moving forward for a bullish continuation. Now, the reason why our current level of support is so important as well is because losing it, that is when the bearish case scenario becomes quite clear as well. So moving below 57.2 thousand, this lower end of our support level over here, what we generally tend to do moving below support is we go to the next level of significance. And our next level of significance is all the way down here at 53,000.8 to 54.6, which is also the range low of our macro channel over here. So what that tells us, if we do see that bearish continuation, is that after this recent rally over here to 62.7, we were unable to sustain that bullish momentum. We didn't reject from the range high, we were just unable to fill that move, and we saw a range low retest. That is exceptionally more bearish than a range high retest and rejection, right? Because it suggests, decreasing bullish strength as we move past this segment of price action and that recent massive flash downwards. So that wouldn't be very good. And moving below that level at $63.8 thousand also moves us below the prior low in that recent short time frame uptrend, which then confirms the formation of a short time frame downtrend and a bearish continuation. So in that bearish continuation, again, we move to the next key level of significance, which starts at 51.4 thousand to 49.8. So in that circumstance, if we see those moves downwards to these lower levels over here and potentially lower than that to test sell side liquidity, it is highly unlikely then that within that same week, we get enough of a rally, like that would be at least 20%, to push us above our prior weekly candle close and above that $63,000 level of resistance, right? Considering it is just so strong. So it is quite important for us to be holding our current level of support, purely because, the next levels downwards are quite far away. But overall, guys, it does look all right. If we go over onto the 30-minute chart, for example, we can see we do have a little bit of bullish divergence here. We've got increasing buying pressure over here, even though the price action is going down. So we are seeing a little bit more of that, what I would expect to be a flash downwards, and then followed by a rapid recovery. But it really does depend on what we see here and our reaction to $57.9 thousand and whether or not we hold that as a base of support. Alrighty guys, that is all the analysis that I have for you today. So definitely some really important price action to be looking out for over the next week. If you enjoyed the video or you learned something, don't forget to smash that like button and subscribe to the channel. And if you're after even more content, be sure to check out my free Telegram for daily updates as well as crypto and economic news. If you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trades with exact entry points, targets, and stop losses. And if you are a trader, sign up down below to Bitunix to get 15% off all of your trading fees and up to $5,500 US in sign up rewards. I'll catch you guys in the next one. Bye.